Hello there. Welcome to Market Call. For the hour, David Burrows is on our show. He's President and Chief Investment Strategist at Barometer Capital Management. He will take your calls, emails, tweets, and video questions on North American large caps. We're going to put that number up. Toll free, 1-855-326-6266. You can send an email to marketcall@bnn.ca. Put in your question by Twitter, the Twittertron. Remember to include the handle @MarketCall. And of course, those legendary video questions. We believe Werner Herzog has one in the works as well. Francis Ford Coppola. You film a quick question on your smartphone and just attach that to an email. It gets you to the front line with your question, and you're also in the running for one of those legendary BNN mugs. That goes to the person who sends us the most creative video question each week. You can put in your video question by Twitter as well. Simply post the video on said platform. David, always great to see you.
It's great to be here.
So the Trump, we'll put up maybe a 1 year for the S&P 500, but the Trump bump, if I can call it that, and of course the market was strong even before his election, is it kind of fading a bit now until people see what actually will be done by Washington?
Yeah, no, I don't think so.
Okay.
We started a new bull market in 2013. 2013-14 were the first 2 years. We would have lived through the first major correction of a new long-term bull market that ended in February of last year. Since February, economic data, price behavior in the market, and leadership has slowly been improving.
Okay.
We made new all-time highs in July. The cyclicals that are leading the market now.
Wait, sorry, are you talking S&P 500?
S&P 500.
Okay,
S&P 500.
right.
The cyclicals that are leading the market started to lead in June, signaling a transition from a market driven by interest rates to one driven by earnings. The groups that have been leading since then are the groups that led through the election period. And then, of course, we made new all-time highs again, well, almost every day over the last few days. And at this point, at the work that we do that looks at the internal behavior in the market is showing steady improvement. There's no deterioration. Earnings growth is coming in a little ahead of expectation. And what you want to always look for in a strengthening market is low correlations, which means that stocks are behaving unlike one another. It's not everything acting the same. That's very healthy in a market.
But I thought you said, so is the breadth good? I mean, are a lot of...
So I track the percentage of stocks across a whole host of universes that are performing well.
Okay.
And we hit a low of 20% in the NYSE in February of last year. Right now, if you look globally, 53% of stocks are behaving constructively. Okay. That can get to 75, 80% and stay there for a year at a time.
And that's a good sign?
That's a great sign. The higher the percentage of stocks doing well, it's easier to make money. And in a healthy market, buying should be slowly spreading to more and more and more stocks. And that's been happening since February of last year. So there is no bear market or major correction in history that happened while breadth was expanding.
Okay.
So I go to do meetings recently and I hear, yeah, but. The simplest way to determine what type of market you're in is look at the way the market reacts to news. If a market can handle bad news and rally, don't fight it. And so, listen, earnings are getting better. Economic data is improving. The backdrop is better. The reason rates are going up is because the economy is getting stronger, right? But if you just look purely at the behavior of the market, breadth is expanding and it's handling news remarkably well. So I just came back from Europe where 70% of the people I met said, market's been great. You know, turns out you were right to get bullish last February, March. We've just been taking profits. Everybody's been taking profits. But what's been happening? The market's been doing this. The leading groups have consolidated over the last 6 weeks, and the last 3 days all started to take out the highs.
This is Europe you're talking about?
This is a European investors, and I was in Western Canada early in January. The same story. It's been great, but we're of course taking profits because we expect a correction. I said, you know, the sad thing is you're going to be buying these things back at higher prices.
Oh, Dave, we've got the calls are piling up. The switchboard is alight. We better get to a break. David Burrows is on Market Call today, President and Chief Investment Strategist at Barometer Capital. The topic, North American large caps. The number, 1-855-326-6266.